Welcome to the Goose Hollow Capital Weekly Market Update. In this edition, we'll recap recent events, preview what's on the horizon, and share some interesting charts and market price action that caught our attention. We start this week with a chart of Fed funds pricing after the interest rate cut this week. As we see, the market pricing seems reasonable given prior easing cycles. Given the market was not fully pricing 50 basis points for this meeting, and they delivered 50 basis points, the default has to be 50 again in November. What's the case for not doing 50 again? In order for stepping down to 25 basis points at the next meeting, we will need the labor market to be much stronger than what we have seen in the recent employment prints. Next, a chart from a recent report by Mario Draghi, the president of Italy. The chart shows a widening gap in growth between the US and Europe. In this period, China has been growing steadily at 8.3%. European growth rate has declined as a result of demographic changes and lack of productivity growth. Next, we look at the chart from Bernstein Research, showing the valuation of AI-enabled biotech companies, and the valuation of these companies are at the lower end of their recent range. The IBB Biotech Index is near its recent highs. How might the decline in upfront payments for biotech partnerships affect the funding and development strategies of early-stage AI drug discovery companies? Given NVIDIA's expanding capabilities in AI drug discovery platforms like BioNeMo, how could this trend of tech giants entering the space impact smaller, specialized, AI-driven biotech firms? It is interesting, while this shift is happening, the timeline on the right shows the implementation timeline as set in the Inflation Reduction Act, starting in 2025, of capping out-of-pocket expenses for drug benefits. Next, a chart from Janice Henderson on Sovereign restructuring this year. There are 8 Sovereign restructuring efforts, cumulatively accounting for just over 3% of the JP Morgan MBI Global Diversified Index, JPM MBI GD. The 3 largest were Ghana, Sri Lanka, and Ukraine, each making up roughly 0.9% of the benchmark, while the others were relatively small. The recoveries on these are higher at 72% compared to HY default recoveries at 49%. A recent paper, A Better Value Recovery Mechanism for Sovereign Debt Restructurings, by Lee C. Buchheit and Gregory Makoff, explores the concept of value recovery instruments, VRIs, in the context of sovereign debt restructurings and proposes improvements to their design. In sovereign debt restructurings, the amount of debt relief needed is based on assumptions about the future state of the debtor's economy. If these assumptions are overly pessimistic, creditors end up giving more relief than necessary, potentially leading to unnecessary future debt restructurings. The authors suggest a new VRI design that is a significant improvement over GDP warrants and other mechanisms. The idea is to apply any value recovery payments toward mandatory prepayment of the restructured debt. This approach would benefit creditors by increasing the market value of their holdings, offer sovereign borrowers a means to improve overall debt dynamics. This new design is simpler, reduces legal risks, and offers practical financial benefits, such as reducing the sovereign's overall debt and future interest payments. The transition to electric vehicles, EVs, is having a significant impact on state gas tax revenues, which have traditionally been a major source of funding for transportation infrastructure. States are trying different approaches to bridge the gap. EV registration fees. At least 31 states have imposed additional registration fees for EV owners to help offset lost gas tax revenue. Taxes on EV charging. Some states are implementing taxes on electricity used at public EV charging stations. Georgia is considering an excise tax on kilowatt hours at commercial charging stations. Kentucky enacted a 3-cent per kilowatt-hour charge for public charging, effective 2024. Mileage-based fees. Several states are exploring or piloting programs that tax drivers based on miles driven rather than fuel consumed. Increased gas taxes. Some states have raised gas taxes to compensate for revenue losses. The combination of these factors will slow the adoption of EV, and ICE cars could have a longer runway. Next, a chart of Ukraine's population pyramid. As can seen, it has an unusual shape due to a mix of emigration out of Ukraine and drop in birth rate. One of the reasons President Zelensky has held back from mobilizing young men is that there are not a lot of them in the 18 to 25 age cohort. There's simply not a lot of them, and Ukraine's demographic prospects look very dire. Russia has a similar demographic problem, making this conflict unsustainable in the medium term. Next, we look at ETFs that have performed the best based on their Sharpe ratio. We find the levered NVIDIA and Meta ETFs in the list given the performance of AI-related stocks. Surprisingly, we also find that the defense technology complex have performed well this year. The SHLD includes holdings such as Lockheed Martin, RTX Corp, and Northrop Grumman. Finally, we look at a chart of central bank independence, CBI, from a recent paper by Barry Eichengreen, Joan Mardias, and Nazir Dinser. The paper discusses the evolution of central bank independence, CBI, from a historical and machine learning perspective. It traces how CBI emerged as a safeguard for price stability, reducing inflation while shielding banks from political influence. Machine learning models are used to analyze various countries' CBI frameworks, showing the relationship between central bank policies and macroeconomic outcomes. The study finds that maintaining CBI is crucial, but challenges, such as fiscal pressures, can threaten it, particularly in times of crisis or high debt. That is it from us this week. Thank you for watching. This material is intended for information purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities to any person in any jurisdiction. The opinions expressed are subject to change without notice. This information is not intended to be complete or exhaustive, and no representations or warranties, either express or implied, are made regarding the accuracy or completeness of the information contained herein. This material may contain estimates and forward-looking statements, which may include forecasts and do not represent a guarantee of future performance.